Hey guys, so today was FOMC minutes. Honestly, pretty unexciting. We had a little bit of a dump there at the end of the day, but not overly exciting, I would say. So taking a look here at what was said during the minutes, I'm just going to give you a couple quick highlights. Overall, I would say nothing surprising out of the minutes. Nothing that was like, oh wow, I can't believe they said that, or any really crazy things to be said. Um, it says staff now sees no recession in 2023, which is weird because I'm pretty sure J Powell did said that we would see a recession at the actual um, thing. But basically, I think the biggest thing to take away is that there's more tighter bank credit conditions than expected, and that should be a big concern. Other than that, like I said, not much going on. As of right now, the market continues to price in a pause at the September meeting. Remember, we do get another CPI reading before then, which at this moment is expected to go higher. So that will be interesting to watch how the markets digest that. Now let's go over the daily here. This is SPY. As of right now, you can see we're in this kind of more extreme black downward channel, and we're also in this red bear channel. So on the red bear channel here, we're coming in nicely. Our support would be about 438.5 tomorrow. On the black bear channel, you can see we could go all the way down to 436.7. The biggest thing that I'm taking away from today is that we closed a full candle under the AEMA again. We are clearly in a downtrend on the AEMA. We had a long confirmed bearish cross under, and most importantly, we closed under the daily 50 EMA. So this pretty much opens up the possibility of coming back down to the 100 EMA, which is sitting right around that 431.25 demand. My biggest target, honestly, is this 426.5 really to about 431.3 area right here. We have two supplies that need to be taken out down here still, and this is a big triple demand area. So I would not be surprised to see us come down here and then start bouncing back up. Now, one thing that's important to keep in mind is once you lose the 50 EMA, the next logical thing is to look for the 100 EMA. So that's why I'm looking for that. It will be interesting to see if we backtest this first. I would not be surprised to see a move back up to about 442.5 on a backtest before we move back down to into next week. Going over to futures here, same thing. We finally had our 2 days of pretty much continuation down. You can see the last time we really had this was this August 1st through the 3rd. So I would not be surprised to see a double bottom back up. So same thing. The biggest thing I'm seeing here is that not only did we close under the 50 EMA, but our candle body actually turns what was support into resistance now. We are under 44.37 demand. So realistically, our next big target is 43.73 demand. Also, our 100 EMA is all the way down here, right about 43.50. Same thing here. I have a bigger target range of about 4240 to right about 4300. You can see there's about 3 different supply levels down here that need to be taken out, and this is right around the 200 EMA. So it would be a bigger sell-off, but honestly, that's where it looks like the chart as of right now is projected to go. If we go over to the Qs, same thing, we're in a bear channel right here. Same thing though, more importantly than even futures that it did, we have this demand right here at 366.1, that, or 365.9, sorry, that we bounced off of. We held it for 3 days. What we did today is not only turn that into resistance, but we also closed under the 50 EMA and turned that into resistance. So from a standpoint on the Qs, I would not be surprised to see continuation. This looks far more bearish than even SPY and futures does. Our target, once again, is a 100 EMA, which is down about 350.3. We do have a bigger area down here that I'm targeting from 355 to really about 357.6 that we should hit first, and that could hold as a little bit of support. But ultimately, that's our target down here, is right about 347. When we go over to the VIX here, so you can see, I haven't updated this, but you can see we put we actually, what we did, a couple days ago was put a new demand in right here at 14.83. So yesterday I was saying in my written TA, I didn't have time to make a video last night, but in my written TA that the VIX had put a new daily demand in. And generally speaking, when the VIX puts its daily demand in and SPY, which it did yesterday, put in a new supply, that's a really high probability that we're going to see a continuation in that trend in that direction. And that's what we got today. So the biggest thing I'm seeing here on the VIX is, yes, we are starting to form a really nice upward bull channel here. It's been broken so many times though that it's hard to really say that we actually are trending up on the VIX. But I do notice that we did come back down. We tested the 20 EMA support, and today we really held the 8 EMA support. Biggest thing I'm seeing here is this, if you zoom out here, this 17.1 area has been major resistance since June 1st. You can see here that we have touched it quite a few different times, and we have not been able to get over that. If the bears want to see a true downside continuation day and a true really more than just these choppy overnight movements and intraday kind of fake out reversals and choppiness, they're going to need to see the VIX get over 17.1 and hold. Ideally, the bears are going to want to start targeting like the 18 to 20 range on the VIX, and that should bring some further downside continuation. It is possible the VIX, much like it has been since August 2nd, that we're just going to stay in this pretty much 14.8 to 17.1 trend area. It's possible that we just stay there. If we do see that, most likely this is going to continue to be this super choppy kind of wave down. You know, if you zoom out to even just our bull channel up, you know, we had plenty of days where there was massive moves up, big moves up, big move up, just like this right here. But on the way down, you can see, relatively speaking, how long it's taken us to get here versus how far we've actually made. I mean, from the top, realistically from the top, which is right here at 460, we'll call it to round it up easy, and we're at basically 440 right now. I mean, it's taken us almost a full month just to drop about $20. Now, if you look back here, I mean, down here at 382, we'll call it, to get to be what would be 402. So that is right here, March 30th versus March 13th. So it took basically half as long to go the same distance going up at most of the time. You know, same right here. This is 418 to go to 438, which is right here. So that's June 15th and June 1st. So about 2 weeks. So like I'm saying, the speed that we went up is very much so greater than the speed we're going down. So we haven't really had the strong bearish capitulation sort of days yet. So I am looking forward to those. I do think, well, kind of like this day right here and with the Japan news, that we will see some of that, but it will be interesting to see if that actually plays out or not. Now that FOMC minutes are out, really the only thing left is Jackson Hole next week. Outside of that, there's not a whole lot of data or big events until CPI middle of September. So, all right, hope you guys had a good day trading today, and I will see you guys tomorrow.